Hi guys, welcome to Paradox of Losing Cycle channel. This video is about the billion-dollar trap. This video, we're going to talk about how the system is designed in trading uh, as well as gambling. When we say trading, is forex trading or margin trading or futures trading or derivatives market, as well as in the gambling. Gambling goes as well as like the offline casinos and online casinos as well. The billion-dollar trap, we are going to be talking about, why we are falling for the gambit in terms of the house or the market makers. And we will be breaking down the game in order to understand how the system is designed to fully exploit the weaknesses of traders and the gamblers. Let's get down to it. So, the design of gambling and trading system is indeed influenced by the phenomena of losing cycles and the tendency to choose losses, or sorry, to chase losses, as these behaviors are common among participants. Now, here's how the systems are designed to capitalize on these weaknesses. We will be talking about six elements, how the system is designed to fully exploit the weaknesses of gamblers and traders. One is how the house agent market makers work in this industry. And number two, we will be talking about the psychological manipulation, how the market makers and the house fully exploit the psychological manipulation by the gamblers and the traders. Number three, we'll be talking about the intermittent reinforcement. It's an inbuilt design within the casino games as well as trading platforms. Number three, we'll be talking about illusion of control in both. And number four, we'll be talking about the complexity and volatility that exist in both in gambling and in trading and how they fully exploit the weaknesses of traders and gamblers. Number six, we'll be talking about lack of regulation oversight in both industries and wonder why. Okay, so let's get down to it. Now, number one, house agent and market makers. In gambling, casinos and online gambling platforms have a built-in advantage known as the house edge, ensuring that they profit over the long term regardless of individual outcomes. Similarly, in trading, market makers and brokers often earn from spreads, commissions, or fees, ensuring they profit regardless of whether traders win or lose. In terms of gambling in the casinos, each individual, by the way, each person will face some kind of ups and downs and volatility, but regardless of individual outcome, the house has an edge because as a cumulative effect of all the gamblers in the casino, if hundreds or thousands of gamblers are gambling, basically, if 10% win, it doesn't really, cause any harm for the casino because, 90% win is quite substantial. So the law of large number is in the favor of the house. And while individuals are facing a volatility on each game, so the individual does not have the law of large number on their favor. They are constantly facing the volatility of the game stacked up against them. So with a high probability of a loss. So this mathematical edge, favors the casino to give them 100% profit over time. While trading is the same thing. Basically, brokers, they earn spreads and commissions and fees because they don't trade, right? So while the traders are taking the full risk in terms of trading the volatility in the market, but the brokers are benefiting from this commissions and spreads and fees resulting from these over trades and multiple trades taken by the traders. Okay, so both the house edge and the market makers, they similarly they have as a 100% profit making in this industry. Number two, the psychological manipulation. Now, both industries employ psychological tactics to keep players or traders engaged and encourage continued participation. Now, this includes elements such as colorful and enticing visuals, sound effects, and rewards like bonuses or promotions to create a sense of excitement and anticipation. Now, you realize that many platforms they have very nice, colorful screens. They've got hundreds of indicators. They've got dashboards and scorecards. They got making look and feel of bank accounts, like your balance, your equity, the margin, the percentage of win, and charts, and key performance indicators. And all of this is basically, is to induce some kind of psychological manipulation to make you attached to the screen. So you are glued to the screen. You are enjoying, the screen. So you feel attached to it, and you're psychologically become very highly dependent on these colors and on these numbers that is constantly moving and flowing. You're not able to detach yourself from the screen as a result. So basically, these are psychological manipulation that are designed by platforms in both in gambling as well as in the trading industry. Number three, intermittent reinforcement. Now, in gambling and trading, both rely on intermittent reinforcement schedules, where wins or profits are sporadic and unpredictable. This intermittent reinforcement is powerful in reinforcing behavior as it creates a strong emotional response and motivates individuals to continue participating in the hope of experiencing more wins. Now, let me give an example how it works. So basically, let's say you bring to the table $1,000, and then you win, and then you think that you won because you had a strategy, and then you repeat the cycle again, then you lose. So it's called the boom and bust cycle. So the boom and bust cycle keeps repeating. So each time you win, you go back to trading or gambling, and then you realize a loss, and then you deposit the money again, hoping to go back to the same win or to the same peak, and then you realize a loss again. So this boom and bust cycle keeps repeating because of you're stuck in this intermittent reinforcement. So you basically somehow you linked as some kind of strategy to or system to your win, and then you want to repeat that so that you can win again. So the cycle repeats. Okay. So because of these ups and downs, and then over time you're realizing an incremental loss, and you're not able to get out of this losing cycle. Because each time when you are realizing a peak or a spike or a win, you're hoping for a similar win. But over time, but because you are realizing an incremental loss over time, it keeps you in the game because you are not ready yet to get out of it, because you haven't really you haven't really escaped this cycle by getting out when you won. So you kept gambling or you kept trading, and because of the losing cycle, it's trapping you to keep you in the losing cycle. You are stuck in this reinforcement cycle. Okay, so it's important that you realize this or you pay attention to this. Then you have the illusion of control. Both systems are designed to give you an illusion of control, both the trading platforms as well as the gambling platforms. Whichever you look at, basically, is giving you somehow an illusion of control. Now, both gambling and trading often give participants the illusion of control, leading them to believe that their decisions and actions can influence outcomes. This illusion can lead individuals to engage in risky behavior, such as chasing losses, in the belief that they can regain control and turn the situation around. So each time you win, you say, okay, well, I won this because I used that technique or tactic or system or method or strategy. And then sometimes you even give it a win rate. You say, hey, this system has a 70% win rate. So you basically, it's an illusion that it's a 70% win rate. So as you keep on using the system or strategy, realize that you are not really winning on a longer term. No system, no strategy, no methodology can make you win over long term in gambling or trading. Both fail. So basically, it's important to understand that these are all illusions, that exist within these platforms in trading as well as in gambling. So the sooner that you realize this, the better off you are in terms of putting yourself in an awkward situation while trading or gambling. Okay, so we have made a couple of videos around this illusion of control. Illusion of control is a big topic, and there are so many things that are going on. It's very, very important for you to understand how this illusion of control works. So I highly suggest that you watch my videos on illusion control. There are two videos that I have dedicated to explain this phenomenon. Next comes the complexity and volatility. Now, both in trading and in gambling, basically they capitalize on the volatility. Now, how does that work? Because the both systems are designed to basically to make randomness very complex. So the complexity of randomness and volatility will create some kind of environment for you to predict or to create systems, to create strategies, so that you can chase your wins or chase your losses. So the complexity and volatility of both gambling games and financial markets contribute to the appeal and challenge for the participants. Now, the unpredictable nature of outcomes can lead individuals to perceive patterns and trends where none exist, further fueling the cycle of chasing losses. So, both in gambling, like slot machines, blackjack, baccarat, sports betting, poker games, or you can say baccarat, roulette tables, um, all the games, and as well as in trading the futures or derivatives, forex, you name it. Okay, so both in trading and gambling platforms, it's really built on volatility, either volatility of the price or volatility of the object, volatility of your cash flow, volatility of wins and losses. And this volatility creates an environment of excitement, of chasing the wins and losses, emotional roller coaster, and then creates somehow some kind of a hope that you can win big and so forth. Okay, so it's a design fully exploited in order to basically capitalize on your weaknesses in chasing the loss. Okay, so it's important to understand that these complexity and randomness and volatility can actually fuel your cycle of chasing losses. Okay, and this is how the systems are designed to do that. Okay, but unfortunately, I mean, either the traders or the gamblers, they really firmly believe that they can have systems in place in order to make money. They can predict this volatility and they can always rationalize this volatility because of something. The price went up because, the market makers are covering the losses. Maybe I can wait somewhere on the support and resistance in order to take that trade and make money. Well, I maybe they are saying, okay, now this volatility of the price is linked to central banks. They might interfere and then they can bring it down. So I'm going to wait on the resistance where I'm going to short this currency and then benefit when the central banks interfere. Or let's say in the slot machines, you might say, hey, I mean, I have faced losses so far for half an hour. It's time to turn around, and then now I'm gonna bet a little bit bigger so that I can benefit from the wins that I'm gonna be facing in the next whatever. I mean, 10 minutes. Okay, because it's due. Or you can say, well, this pattern is basically, this pattern basically, I've seen this before in Baccarat, where it's called the terrible twos, and then it's going to continue, or it's going to break out from the terrible twos and going to basically bet against the symmetrical pattern. Or I'm going to basically follow the streak until it stops. So basically, there are so many different patterns that you can think of whenever there is a volatility. And basically, in all these games and all these trading platforms are fully designed to give you the volatility you need. And you might be even wondering, where the volatility is coming from. I mean, this volatility is not even due to peer-to-peer trades in the financial market. All this volatility is created by algorithms. Okay, and algorithms basically they create this volatility to fully exploit your weaknesses. Okay, that's how the systems are designed. So it's important for you to realize this. Then we're going to talk about the lack of regulation and oversight in both in trading and gambling. Now, in some cases, the gambling and trading industries operate with minimal regulation and oversight, allowing for exploitative practices that takes advantage of vulnerable individuals. Okay, now this lack of regulation can contribute to increased risks and losses for participants. Now, both in gambling and forex trading, basically, they may, you know, um, make you perceive as if they have a regulatory license in place, but they don't. Honestly, none of them have a proper regulation by the regulator. So all what they have is just a license to operate. Okay. Now, this just keeps me wondering why. I mean, why do they do that? So basically, let's say gambling. Okay, now in online gambling, they most of them they get a license to operate either from Curacao or from UK or Canada or whatever. I mean, or from offshore jurisdictions. So basically, they get a license to operate. Now, it's just a license of operation, but there is no protection for gamblers. So if you lose money while gambling, try to complain to the regulators. They will have a blind eye. They completely will ignore you. Okay? They will not cater to your complaint at all. They will just completely ignore you. Now, if you lose money in gambling, it's gone. It's finished. It's done. You can complain to anyone. You can raise a lawsuit. It's very, very difficult to sue the casinos as well as trading companies. Like it's very, very difficult for you to complain against a broker. If you go to the regulator and say like, "Well, I lost money in the market because the price went against me, and I think that the market maker manipulated the price," they're gonna laugh at you. So it's important for you to understand that there is no proper protection by the regulators on gamblers and traders. Okay, if they say like they are FSA regulated or they have a license from some jurisdiction, it's just to make you feel safe, and that's about it, really. I mean, there is nothing there's no protection for you, by the way. If they have a license from a regulator, you don't have a protection at all. All right. So now, at the same time, the regulators they are making a lot of revenue from gambling. I mean, the casinos they give sometimes even 50 or sometimes even more than 50% tax revenue to the governments in jurisdiction they operate. So maybe there is a benefit, for the for the regulators, like why they want to keep it as at a minimal regulation so that they can get a hefty and substantial amount of revenue from this industry. Same thing with the forex. All these brokers they give a huge amount of fees, licensing as a revenue for the government and the jurisdiction they operate. So it keeps you it just makes you wonder like why this is happening. But one of the reasons is that well, look, I mean, if a jurisdiction, if the government there says like, well, I'm going to allow gambling, why? Because if I don't allow here, here, then the gamblers will go and gamble anyway in somewhere else. So why why we let the money go somewhere else? Let the money come to us rather than money go somewhere else. So basically, this is the kind of rational explanation or justification the policymakers they justify that why do they allow gambling in that specific jurisdiction, because the gamblers will not stop gambling. They will gamble either in their jurisdiction or in another jurisdiction. So it's pointless to protect the gamblers because gamblers are idiots. They are just gambling and losing money anywhere which allows them to gamble. Okay, so you can't really say that it's the regulator's fault not regulating, the industry, because I mean, what kind of regulation you wanna provide to gamblers? I mean, gamblers are reckless by nature; they are losing money. So, I mean, I don't know. I mean, it's it's kind of a tricky situation. Okay. So the only way in order to protect you from losing money is not to gamble and not to engage in online trading. So if there is a lack of protection, lack of regulation, lack of oversight, why you want to gamble or why you want to trade? I mean, why you want to take that much risk? I mean, unless if you really believe that you can make money, you got a strategy, you got a system in place. Well, I mean, guess what? I mean, in the casino, if they find out that you have a bulletproof system that you can make constantly money from, they're gonna stop you from playing there. They're gonna kick you out. They're not in the business of giving you the money. All right. Same thing in trading. Okay. If you have a system in trading, in forex trading, if you have a system, if you figured out somehow a system in order to make money, believe it or not, they're gonna close your account. I mean, if you are a consistent winner in both in trading and gambling, I don't think they will allow you to continue on their platform. Okay, because the system itself is designed based on a losing cycle. A system is designed to exploit your weaknesses, not your strength. These systems are designed to, grab money from you and not to give you any type of money. Okay, so there you go, guys. That was some kind of explanation of how these systems are designed in trading as well as in gambling. I hope you enjoyed it, and we will see you in our next videos. And yes, please do not forget to press our subscribe button and the like button. And if you have any comments or any questions, please provide us with your comments below, and we will be responding to you as soon as possible. Cheers, guys. See you soon.